stocks get smashed. What's next for the market? So I was going to do a video on these prop firms today, but in light of yesterday's moves, I thought, oh, we'll have a look at the markets. We'll save that one for the midweek. So um, I'm not going to give commentary about what has happened. It's about, well, where are we and what next. So from a technical perspective, in the space of one day, uh, price took out actually the best part of a month's worth of prior trading, but it was low volatility stuff, and that's the problem when you get into very low volatility and then an event happens. Everyone's long, and collective selling comes in, and then very quickly you can get a big downdraft like we've just seen. So first things first, on my S&P chart here, we're coming into my 50-day moving average. That is the zone of this price action back here. So somewhere around about 6,500. But firstly, it's not, before we go any further here, you can see I've got a channel on. So if I come out to the weekly chart, these channel lines have been on this chart for ages. And so this channel reaction is just come off the top of the channel line here on the SPX here. So a couple of notes. This week for the S&P, I believe for the Nasdaq as well, we have got a key reversal week. So a key reversal week is when you make a new high up here, but then we close below the low of the previous week, and so that denotes a key reversal bar. So and it's happened, of course, at new all-time highs as well. So now we did get a key reversal week a couple of months ago, and it amounted to nothing. But nevertheless, we do have a key reversal week. They are good candle formations. They don't all work, like nothing else all works. But normally we would expect some kind of follow through from that. So keep that at the back of your mind. On the weekly chart, momentum's waning, but momentum will wane even in an upwards trend. So a couple of things to note from a fundamental perspective is that when Trump slapped those 100% tariffs on Chinese goods last night, he did put a 1st of November date on that. So it does allow room for negotiations ahead of that 1st of November date. So probably what's going to happen is that the markets will sell off a little bit between now and then. They'll then have a cuddle and at some point, and then announce some form of deal, and then the stock markets will go back up into the year end. That's probably what will happen. But we've been here before. Having said that, there are a number of key individuals who have been concerned about the stock markets. Paul Tudor-Jones just this week was talking about the comparison with the stock markets now and 1999. Not that he was putting a time frame on it. In fact, he was sort of saying that we may still, we could very easily still have quite a move to the upside yet before any final top. Ken Griffin was being interviewed on Bloomberg and Citadel, and he was talking about his concerns for the markets as well. So, and then you can look across others as well. You can look at Jeff Bezos and talking about AI, and across many different areas. And Jamie Dimon of JP Morgan has been saying that the risk to the markets is not in necessarily interest rates or whatever. It's actually in geopolitics, and that's exactly what we've got at the moment. So anyway, so those are some of the more cautionary tales there. So for now, from a technical perspective, the S&P has come up into a long-term trend line. It's not only reversed, but we have got a significant price bar there. Now, in the very short term, coming back to the daily chart, it's going to be coming into a bit of support here. I suspect there will be, probably some buyers coming in somewhere in this zone here. But we do have a bank holiday in the US on Monday, not for the stock market, but for the bond market. So how would I look at this? I would be cautious in the near term, just because of the sheer size of the run to the upside, and the news around this. Now, the problem is that this type of thing can change very quickly, but I suspect it won't change that quickly. with what Trump's announced there just yesterday. So I think the risks obviously are to the downside from a technical perspective. Given the reaction here, then the risks are to the downside. Ultimately, though, for now we have to assume that any downside push and that the relationships, the deals are done, and these issues are resolved, and then at some point the stock market then turns back. At some point, this year, later this year, because so often you get a rally into the latter part of the year with the Santa Claus rally. So a shock move now, probably some more downside overall, follow through from that, and then at some point possibly even come back down as low as, dare I say it, 6,100 or so to these highs. Dare I say it, but certainly some sort of follow through from last week, and then probably a rally into year end at some point. So anyway, fascinating stuff there. But what about elsewhere? Well, interestingly, a lot of people say to me, "Oh, Charlie, if the stock market sells off, the dollar will go up," and that was a significant sell-off day there yesterday. And what did the dollar do? Actually, didn't go up, went down. So it's not always the case. Much like if I come to the dollar here in March, April, it was generally going down, the dollar, as the stock market was going down there. So just remember that there are other factors at play that are influencing the dollar. So I always find that an interesting one, because people just make that assumption. And it is true that largely, if the stock markets start coming down, then the dollar normally would benefit, but it's not always the case, and we've seen an example of that just earlier this year. Of course, one of the big headlines was crypto last night, because the huge runs. I was watching this yesterday evening. Bitcoin had a huge run to the downside. I'll just zoom out somewhat here, but for Bitcoin, it was, if I can have a look at the percentages, so it closed down 7% on the day, but it was down about 10% or so. But really it was elsewhere. So if I come to some of the other cryptos, like Cardano, I mean, wow, the move that don't get me wrong, it's swiped back up. Again, I think it's a reminder of the liquidity of cryptos, of some of these coins. And so, and a lot of people say, oh, that was a liquidity sweep sort of thing, taking out all these lows from this year. But it really was a huge move down, and it got saved by the bell, at the last, really, because if I put it onto an hourly chart, you can see it swiped down all in that 1 hour, and then came all the way back. So for UE, but for some of these, and it was similar with the likes of Ripple as well, had that huge move down. So it's just a reminder of the liquidity of some of these at times. So is there any warning or anything here? Well, possibly it could, that could have been it already for some of these cryptos. That was a significant move to the downside and bounce back. So that could already be it as far as they're concerned. Coming back to Bitcoin, obviously it's a lot more stable than a lot of those others, but certainly it's a bit of a warning here. And what it also says is that people always talk about Bitcoin being digital gold. Well, it's still yet to prove itself overall. More often than not, if the Nasdaq and the stock market start selling off, Bitcoin comes down as well. Whereas, what's gold doing there yesterday? Yeah, good old gold. So I don't see it as yet. It hasn't decoupled as yet as an alternative in times of crisis, because more often than not, when the stock markets are going down, Bitcoin is going down as well. Bitcoin obviously got the headlines this week Gold got the headlines this week, obviously, with hitting 4,000, and silver hitting those all-time highs up there at $50. So a bit of volatility there for silver. I've been holding silver since I bought it back in 2018. so at $15 an ounce. So I'm still looking. This was a target for me, but I'm sort of considering whether to just hold it forever and just pass it down to Leah. But anyway, impressive stuff here. And in times of turmoil, then gold and by proxy silver are going to benefit there. So this just continues to underline the fundamentals behind them. They are going to do pullbacks at some point, but pullbacks are there for investors, I'm sure, to be buying. That's enough from me today. So I was going to do this other one, but I'm really looking forward to doing this video on on these prop firms. I've got some great stories for you, so I'll get that prepped for the week.